Okay, we're back with the Wall Street crossover show sponsored by Admiral Markets, and today we have Darren Sinden, who's their market commentator, fresh from a holiday, which I don't want to hear the details because it'll just upset me, but presumably you had a good time.
It was very relaxing, Zach, thank you, just one.
And obviously you are aware of what you've done to the financial market since you went away.
I don't think I can claim any credit for that, Zach, thank you.
Right, anything that you can add to the situation with Greece? Or I mean, they are, as we said before we started, they've done everything they can to keep it exciting for us.
They have. I think the truth is it's decision time now. But I think the ironic thing is that nobody knows quite what that decision is going to be, or indeed how to affect it. I think the other thing to bear in mind is that it runs the risk now of also moving beyond the political and economic crisis and perhaps becoming a humanitarian one as well. So we need to be mindful of that. Well, the next few days will be very telling indeed. But obviously it's getting very tough on the ground for individual Greek citizens, and you have to feel some sympathy towards them. Despite most of this being a mess of their own making.
Yes. Okay. Well, let's move swiftly onto the data released over the European session. Obviously, the Germans I think they're going to lose £68 billion that they lent to the Greeks. So that's what they're looking at. But the factory orders today. Anything?
Well, yeah. Well, I mean, just a slight contrast, really. The factory orders for May, as you say, the month-on-month number was down 0.2%. So slightly better than the forecast of minus 0.4%, but much lower than the prior read of plus 2.2. So a slightly negative number still, even though it was better than the forecast. What's interesting though is that if you look on a year-on-year basis, that numbers were positive and very strongly better than this time in 2014. So it's not all doom and gloom. We moved just over the border into Switzerland. They had some inflation numbers. The June CPI, this is the year-on-year measure we're looking at here. Deflation still alive and well in Switzerland. CPI number came in at minus 1%. It was again a bit better than the forecast of minus 1.2%, which compared
incredible. These people are in trouble. No wonder they were trying to fiddle their currency and everything else like that.
Well, yeah, it's very difficult for the Swiss. Obviously, they find themselves very much between the rock and the hard place. It's obviously the complete antithesis of Greece, and nonetheless, being a solid.
They should replace Greece in the eurozone. That would be a good way of weakening their currency.
Well, I doubt that's going to happen, but it would potentially be something. Or maybe there's some kind of clever swap of cash flows to be done. Anyway, that's the situation in Switzerland. Continuing deflation. As we've said, the Greeks have kept it interesting, voting no in the bailout referendum. I think perhaps one of the most interesting moves today was the resignation of Varoufakis, the finance minister. He's saying that certainly Eurozone participants had a preference for him not to attend meetings, and of course I think we'd heard that before.
Well, he still turned up though. But the other point is it's a good place for him to leave in terms of before the things potentially got rather messy.
Yes, I don't know if anybody saw it, but I called up today with a fantastic interview which a rival station had with him last week, and he didn't pull any punches, but he spoke very eloquently. So if you get a chance to dig around on the internet and look at that, I suggest you do so.
I think he may be fishing for a job in the private sector.
Quite possibly. Anyway, let's move on to European movers. A couple of things picked out today. First of all, Rolls-Royce, 782.5. They are this morning. The ticker is RR in London, down around 8.6%. And the reason simply this: the company has issued its third profit warning within 18 months. It's cancelled its first ever share buyback. It's a £1 billion share buyback. It's roughly halfway through that, so that's been stopped now.
That's a mess, isn't it? That really is a mess.
It is a mess, and the company's citing weaker demand in its airliner and marine businesses. So that's the bulk of the business. Some brokers are saying actually that the reflection, the CFO was hinting at these things when he was interviewed at the Paris Air Show, but looking at the share price reaction, if he was hinting at that, most people don't appear to have got the message. So as I say, they're down 8%.
Well, I think the share chart, because I looked at the shares last week, I made a call on them last week, and it just looked as though they were going only one way, towards the £8 level. So the only positive there is that the normal rule of profits warnings coming in threes, and we've had our three.
Absolutely. So perhaps this is the low ebb. And then in looking over at Italy, picked on UniCredit this morning, ticker UCG there in Milan. They're around €5.82, down about 3.6%. And basically, this is a proxy for all Italian and I guess in brackets, the European banks just weaker on the Greek no vote, and about the uncertainty ahead, and the possibility of contagion. Because as I said at the top of the programme, nobody really knows what the next course of action is and how to extricate ourselves from the mess. Even if the Greeks want to leave, I've read some stuff today that suggests they might not be able to. So it's a real muddle, and good luck to the Eurogroup trying to sort that one out. So if we move on again. So M&A rumours and movers. I think I'm right in saying that just before I went away we were talking about the US healthcare insurance sector, and we're back there again with confirmation that Aetna, AET in the US, has confirmed its bid for Humana, HUMUS. Aetna's going to pay around $230 a share for its rival, and Humana shareholders will get in that mix $125 per share in cash, and about 0.83 of an Aetna share per Humana share, and that translates basically to a deal at a 23% premium.
That's fantastic news. I mean, the other thing, I suppose, this whole sector is it's one of the big demographic winners, isn't it? It's just every day that goes past, it's more tilted in its favour. Absolutely,
you're quite right, Zach. Aging population is definitely in their favour. This deal is the first that's confirmed in the healthcare insurance sector. It's unlikely to be the last, and I think probably the catalyst, a recent US Supreme Court decision to uphold the Obamacare reforms, and I think now that that's been stamped, shall we say, look out for further consolidation in the sector. We talked about Cigna and Anthem being in talks. I think probably some of the others are as well, and I suspect more papers will be inked and deals done in the not too distant future.
Okay, and on to the what's the data points?
Yes, US data points. Two sort of numbers to look at today from the US that I picked out. First of all, the PMI, Purchasing Managers Index Services measure for June. Forecast here of 55.1 versus a prior 56.2. Number has been waning over the last few months, so it would be great if we could see the US post a stronger number, but the trend has been lower. And perhaps the more important number that people look at these days, the ISM non-manufacturing number, is for June, and we focus on the composite number here. The forecast here is for 56 versus a prior 55.7. This is a strange number because the higher the read, the longer it's taking for companies to actually make deliveries. So in theory, you'd look for a lower number, but the reverse psychology is it's good news if the number's higher and deliveries are taking longer, because it suggests that there's a limit, there's a extra demand and limited capacity, which means there's room for growth. So quite confusing, okay, but higher number is better, even though technically it's not. There's the way to think about that. Okay, and then if we move, well, in terms of pre-market movers, not much in the way of equity movers this morning because of the long weekend for the 4th of July in the States. So I've just taken the liberty of looking at what the expectation is for US equity markets as far as the S&P 500 futures are concerned. They're cooled down between 0.5 and 0.6%. So as far as the S&P futures are concerned, look for them to open around 2057. This afternoon. Simply US equities taking a sympathetic view alongside European equities after a Greek no vote. And then the other big mover this morning, and also playing a little bit of catch-up really, was WTI crude, so US crude oil. This time it's the August contract we're looking at, $54.50 a barrel. That's down 4.3% on the session.
That's painful, isn't it?
It is. Why is it weaker? Well, obviously negative sentiment towards Greece, but also weak US inventory numbers last week, i.e. a build in US crude supplies, and also a very weak rig count number, Baker Hughes rig count number on Friday, suggesting that exploration in the US is contracting still. So we'll see if that's just a one-off event over the next sort of 24 hours.
We've got a risk of back to 40 as a retest.
Yeah, quite possibly. I mean, I have to say I was surprised to see petrol at 115 pence per gallon here when I got back, and maybe we'll start to see, petrol prices start to weaken as well. And in terms of equity markets, obviously people have voted with their feet with all the issues around Greece in Europe. So the FTSE, we're now looking at 65.20 as a downside level, and I've gone with 6,600 just for a bit of round number psychology on the upside.
But well off the low. I think 64.15.20 was the opening gambit after the shock of the no. So it has recovered,
absolutely,
basically within the range.
Yeah, I suppose that's the best way to describe it. And the DAX also off the bottom, 10,840 is the downside level I've gone for there, and 11,075 to the upside. As far as US markets are concerned, I've gone with 2070 for the S&P on the downside, although even though we're likely to sail straight through that on the open, and 2086 as the upside level that probably won't get tested today. And as far as the Dow's concerned, I've gone with 17,677, plays again around number 17,800. Currencies, the euro's probably held up better than many might have expected, but I've gone with €1.10 against the dollar on the downside and 110.56 to the upside.
We didn't. Just to point out, we didn't actually break the low, I think, of June. The default day low, 109.50, I think that was there. So we held above that. Might be significant.
Yeah, that probably is quite a key signal for now. And in terms of the Aussie dollar, I guess the US dollar 74.60 on the downside, plays 75.20 on the upside. Dollar yen. The yen was weakening as I came out of the office, but 122.48 plays 122.92, and then in cable 155.30 versus 155.81 on the upside.
Okay, well that's pretty comprehensive. You're back in the swing of things, Darren, and recharged. And hopefully we'll have more of that this week. You won't sort of fizzle out in the fierce London heat. Darren Sinden, market commentator at Admiral Markets, thanks very much. And we'll be back with the Wall Street Crossover Show 1 p.m. tomorrow.